Hello traders, welcome back to the channel. We spoke about supply and demand on our previous video, and we spoke how supply and demand moves the price or the value of the trading elements up and down. In this video, we will look at more details about how you can identify the bullish and bearish candlestick patterns, and the shape of the candlesticks when it reaches to the end of these bullish and bearish trends. Later, I'll walk you through how a candle is actually made, how buy and sell orders come in and shape the candle right there in the live market. At the end, I'll also cover the difference between theory and reality, the real truth behind the market at points where bull or bear trends end, and the areas where most traders get trapped. So this video is going to be an interesting one, and I'm confident you won't find this kind of information in any other candlestick video on YouTube. So make sure you watch until the very end. Your future success will depend on how good you are in understanding these key elements. So try to grab the basics which we are discussing here. Let's get into the topic and speak more detail about the characteristics of the candlesticks first. This is Polkadot, one of the top crypto coins in the market and its daily time frame. If you are a Forex trader or trade on any other markets, please bear with me, I took this as an example. Things I discuss here applies to all the markets. So look at this last candle. This green part we call the body of the candlestick, and these small parts we call them wicks of the candles, or shadows of this candle. Its starting price is here, meaning this is the open price. Then price has dropped a little bit, then price went all the way up to here, dropped back down to this level again, and this is where the candle is going to close. It's still got nearly 2 hours to finish the day, but for the time being, let's say this is where it ends. So this is the open of this candle, this is the close, this is the high, and this the low. These are the 4 important elements of a candle, and we spoke lightly about them in my first video. So if you see a long candle like this, what we can say about it, or what is the idea which we can get by looking at these kind of long candles? If we compare this candle with the previous one, on this candle price has gone up a lot more, or the size of this body is a lot larger than the previous candle. So what does it mean to us? Now we already know about supply and demand. We spoke about it before. On this candle, it has a massive price variation from here to here. Value has gone up a lot more than last candle. So what we can say, buyers fought hard over here. They have created a massive demand. It is all about buyers here. We can say buying pressure is higher inside this candle. So if the candle body is huge like this, we can say buyers are in more control than the sellers. What if it is a red long candle? Same like this appearing on a downtrend. Following this bullish trend, look what happened. After a small bear candle, a pure sell pressure candle is created, and a good example of high selling activity after this small bullish trend. Not even a wick created below here, which shows high selling demand. So what we can understand by looking at this, sell pressure is higher, and sellers are in control now. Take this candle here. If the candle body is smaller, like this, we can say there is no huge selling power involved in that candle. After this massive movement, buyers and sellers both might have fought over here within this price region. Nobody could create a huge movement towards up or down. Then this candle here, it looks like sellers have become tired. Buyers have tried to push the price upwards. And after this, sellers has jumped again here. So it tells us a story. After seeing this buying pressure towards upside, new trader might think that the price action is going to reverse from this point. But market has sold out again. There is no proper structure for these patterns. Creating a small downtrend with a reduction of selling pressure on the candlesticks doesn't mean that it is going to reverse the market. Theoretically, this is how we read the candle bodies. Whether you're a scalper trading on smaller time frames or a swing trader working with larger times, the reading process is the same in both cases. It takes long time to understand these situations. Keep this in mind as we move forward, because it's going to be very important. Let's go back to the charts and take a closer look again. And this is the near coin 5 minutes time frame. Now, there is a reason I took this chart to explain you about the candle bodies. I could have taken one which shows clear bullish or bearish candlesticks, but I need to highlight something over here. Have a look at this candle. It is having this long body candle. Then the next two candles are smaller than that. What does it mean? The buying pressure is reducing. Then what happened over here? Sellers came into action and they have made a red candle here. Then after that, a long bullish candle, which shows us good buying pressure again. Then gradually, the sizes of these bodies getting smaller, which shows us that buying pressure is decreasing and buyers are losing the power. What happened after that? Sellers came into action. They have created a red candle with a massive wick towards downside. Then what happened? Another two bullish candles. This is the theoretical way of reading this movement. Now let's try to understand this, or read this movement like a proper trader. What we've discussed so far explains how buying and selling pressure drives price movements. But now it's time to look deeper into the presence of market makers and how their actions manipulate price to trap retail traders. When there is an uptrend happening like this, 75% of the traders in this world waiting with such a patience for red candle like this. For what? To take a sell trade, to reverse the market. That is the normal mentality of the retail traders. After this kind of bullish pattern and small candle bodies like this doesn't mean that we can jump in and short the market. Now try to grab how this red candle is getting created. First, it will move up here and come all the way down to here, breaking lows of both these last two bullish candles. What do you expect now? You think it started a sell-off, and you take sell entries around this area. But price has gone up again, and all the people who took sell trades here have got caught or stopped out. That is how market makers manipulate the market and make money out of new traders like you. I'm telling again, when the market is going up like this, 75% people are trying to short the market. They will never try to trade with the trend. They draw the resistance lines, order blocks, trend lines, every other drawings on top of this, and stay ready to short the market. Let's see how this red hammer candle is created. It opens here and move little bit up, then start going all the way down to here, breaking lows of both previous bullish candles. Now, what do you expect at this point? In real time, it looks like this. What do you expect if you were here in front of the computer? You think market is going to sell off and you jump in and short the market. But what happened? At the end of 5 minutes, market makers have moved the price up again, trapping all the retail traders. They have two reasons for this movement. First is they need to liquidate whoever entered around this area with long trades. They will stop out or they will go out from their trades. After seeing this kind of massive red candle, they think a sell-off has started. Second purpose of that movement is to get the sell trades opened by pretending that market is going to sell off. So all the retail traders who didn't short at this level will jump here on this candle. Seeing a candlestick like this is more than enough for them to take that decision. By the end of those 5 minutes, they've fulfilled both of their objectives. They have trapped both buyers and sellers within this single candle. This is what they do all the time. Try to understand this reality. If you understand these hidden small things, you can stay without getting losers from trading. Market makers have a deep understanding of the psychological behavior of new traders. This is a bit of advanced knowledge I'm discussing here, and if you don't understand 100%, stay in touch with me and you will grab these things in future. They know that people are afraid to jump into the trend. More than 75% of people never trade with the trend. They always looking after the reversal trades, so don't get nervous with that if you are a new trader. This is the reality and you should get ready for that in future. I will try my best to drive you through all these hidden secrets, but this is a bit of advanced knowledge which you will find later on with this channel. First, we need to learn all the basics and then we can start discuss about these stuff later on. Price action will reverse at some point. But that happens after they remove all the people who were waiting to take short trades here. Look at this area. They finally started bringing the price down, because there are no more people to short now. That is how the market behaves. That is how market makers drive this market. It is not all about outside buyers and sellers who drive this price action. They do contribute, but mostly it is the market makers who drive this market. If more sell trades opened at these points, they will never bring the market down. If they do it, they have to pay the profits for the people who short here. So first, they will hunt the sellers down. Then they will move the market. There are sell orders getting opened here. But they are negligible in lot size. That profit which they're going to make would not harm the market anymore. Otherwise, they would not bring the market down at this point. It is same the other way around. If more people opened up buy trades, market will never move upwards. First, they will hunt the buyers, and then it will start moving upwards. So it is very, very important to understand this. Market does not always behave according to the theories we learn about it. If it behaves according to all the theories we learn here, then it's a holy grail. We can make millions out of it. No, it doesn't happen the way we want, and that is why 95% of people fail on this. So you can't just go and jump into trades just by watching these videos. You have to remember that, save your money, and you can do it later on. Look at here, a good sell pressure candle after a small one, and people will never jump on this candle now, because they have exhausted with their losses, happened over here and here. They will stay out on this candle. Then once they see this huge sell candle, that is where they get their confidence again. People must have jumped up on this candle with decent volume of sell trades. What the market makers done after that? They bought the price all the way up to here, covering this whole red candle. They showed the people that market is going to buy again. So whoever opened up their sell trades here got either stopped out or jumped out from their trades. So what happened to the buyers who jumped over here? They got trapped again. This is how they steal your money. This is the gold chart, and if you trade with gold, it does that on almost every candle. Always move the price up and down to hunt retail traders. So be very careful. And if you are a new trader, my advice is avoid playing with gold until you become experienced. Let's look another chart before we wrap up. This is US dollar Japanese yen 5 minutes chart. Market is selling down with good high-pressure selling activity. Look at this previous low where market reversed last time. What regular traders do, they mark that level like this and wait for a confirmation to jump with buy trades. Once price reached here, and once they see this green candle forming, they jump in. But what happened? They all got trapped or wiped out. Then again, market going down with good selling activity. A good bullish candle getting formed, engulfing the previous red candle here. That is enough for the retail traders to jump in with buy trades. And what happened? They all got trapped. Again, the same scenario happened here, and another time over here. This is a 5-minute chart. If we go to 1-minute chart, we can clearly see how they took all the stop losses of the buyers who entered at these locations. And finally, this is where it started rallying up. So this is the reality of this market. First, they remove all the traders who jump with higher lot sizes, because if they rally up with those bigger lots, they will end up paying lot profits to those traders. They never do that. And once all those big players wiped out, that's where they turn the market. So again, I'm telling you, seeing this pattern doesn't mean that you can go to the market and get ready to take a reversal trade every time. This is basics which you need to remember, and understanding this behavior will save your hard-earned money in future. I think that's enough with this video. We talked a lot through these examples. I tried my best to go in more detail and explain you what really happening behind these markets. On our next video, we will talk about candlestick wicks because they are very important as much as the candle bodies. If you have any questions, please write them on the comments section and keep this channel subscribed. I'm sure you won't regret it in the future. Goodbye for now.